What's good, people? It's ABFX and you're welcome back to my channel. So, guys, in this video, I am going to be teaching you my strategy once again. I'm going to be showing you the ABC strategy, the three-step strategy, the SBI strategy, the sweep shift entry, whatever name you want to call this strategy. So, in my opinion, this is the best strategy that is out there. And this strategy, if you trade it properly and you maintain your cool, you don't misbehave, you don't like just trade emotionally, if you just maintain your composure, you will always win with this strategy. Out of 10, you will always come out on top, right? So I'm going to break it down for you. I'm going to show you the various components of the strategy and the different ways you can trade the strategy. So first of all, before I go down, before I explain what this is, I need to tell you the three most important things you need to understand before you can trade this strategy. So the first thing you need to understand very well is market structure. The second thing is liquidity concept. You need to understand liquidity very well. Then lastly, you need to understand, you know, your point of interest. What makes an area a point of interest? What qualifies like your point of entry to be a valid point of interest, right? So the first thing, let me write it out so you see it. The first thing is market structure. The next thing is liquidity. Then lastly, POI, that's point of interest. So you see these three things, eh? These three things, that is like the most important thing you need to understand in this strategy. Very simple. So the number one, what is market structure? Market structure is simply understanding how the market works, simply understanding where price is going to, how price has been moving. Has it been moving sideways? Has it just been ranging in one spot? Like for instance, this price action right here, you can just generally see that this price action has just been, moving, ranging. It has been going sideways. So here you cannot see that price has been going down or up. It's just going sideways, right? Then here you can see that this is a downtrend. So just from this chart here, we have established market structure. We've established that this is a ranging market, this is a trending market, downtrend, right? You can also say that this is an uptrend right here from here to this side, right? So that is what market structure is all about. You trying to establish what the market is doing. Is it in a ranging or trending market? But beyond that, market structure goes deeper than just this. This is the basics. Uh, in a deeper sense, market structure is you trying to understand the flow, the order flow in the market. That means who is in control of the market? Is it the buyers or the sellers? How do you know that the sellers are in control of the market? Is when you see a continuous, creation of lower lows within a particular price range. From this high to this low, price has continued to break and form new lows. It is trending downwards. The order flow is such that the sellers are in control of the market. You get? So that is all about, market structure. That is market structure. Then the next thing is liquidity. So this liquidity is also very, very important component of this strategy that you need to understand. You need to understand what liquidity is because is this liquidity that will help you to know when you want to be looking for a trade, when you want to be looking for an entry, right? So there are various different types of liquidity. You have the liquidity that it's a trend line liquidity. You have equal tops, equal lows, equal highs and equal lows liquidity. You have inducement liquidity. You have different types of liquidity. So if you don't understand all of this liquidity, and if you don't understand or know where liquidity is in the market, it will be difficult for you to trade this strategy because you will always find yourself at the wrong side of the market. So liquidity is very important, right? Then the next thing is point of interest. Point of interest is quite easy, just for you to look for where you want to place an entry, for you to look for where you want to place your trade, right? That is point of interest. So I will make detailed video of each of these single, things, market structure, liquidity, point of interest. I'll do that. But for the purpose of this video, assuming you have a very good understanding of market structure, liquidity concepts, and POI, let's dive into this strategy, right? Let's delve into this so that you get to see it. So now, this system, this trading model, I call it my trading model, right? It's very simple. So the first thing you want to see is that price has taken out a liquidity. This sweep you see right here means that price has taken out the liquidity. So you want to see a trading range whereby price comes up and sweeps liquidity. Price comes and sweeps liquidity. After taking the liquidity at the top, it goes down to take out the previous low, thereby creating a break of structure. When it creates the break of structure, it forms a new low down here. Then it comes up, creates a lower high, and comes down to further break another structure to the downside, creating a second break of structure. So when you see this happen, after a liquidity sweep, you get a break of structure, you get another break of structure, two breaks of structure to the downside, to the opposite direction. What you then want to see is that price comes back to take out this lower high it has created, then it continues to the downside. So this is the strategy. This is simply the strategy. You want to understand the structure of the market. You want to sell in a trending market, a market that is trending downwards, right? And then you want to sell again. There is the premium and the discount. The premium is an area where you should want to sell from. The discount is an area where you should want to buy from. So assuming this is a trading range, right? From this high to this low, this is a trading range. Market created a high here and it came and created a low here. You will use your Fibonacci tool to know where is your premium and discount. So if you draw your Fibonacci tool on the trading range, this area above the 0.5% is your premium. So you want to sell at premium. This area below your 0.5% is your discount. So given a trading range, this will also help you. Most times, this can help you prevent a loss. So you want to sell the market when the market is trending downwards, but at the same time, at a premium. To be honest, some of the times, this can get complicated. But it's all about practice, practice, practice. When you trade this multiple times, you tend to just, you know, understand how the market works better, and you now tend to catch winning trades or high probability trades. So if you trade this over and over again, with time you can now easily pick out a high probability trade, and you can also see a trade that doesn't really hold water, right? So when you have a liquidity sweep like this, price takes break structure to the downside, comes up, creates a lower high, further break structure to the downside a second time. What you want to see is that price comes back, takes out this lower high, taps into your point of interest. So this right here should be your point of interest. What you'll be looking for is you should be looking for an order block, indecision candle, whatever candlestick pattern that will point to here and makes it a valid point of interest. And there are two things, or one thing, the most important thing for you to consider an area a valid point of interest is that it has taken out liquidity. So this place right here, for it to be a valid point of interest, you must see that to the left, it has taken liquidity, a very obvious liquidity sweep, such that now that price is coming back to it, it's not going to sweep it, it will hold, you get? So that's it. So this is one way you can trade this. The second way is like this. when you have a liquidity sweep, price comes down, but before it creates a break of structure to the downside, it goes back up to give you the inducement, to give you the fake out, the fake move. It goes up to give you the inducement. Then it comes down to break the structure. So what then you're looking for is to see that price comes back up to this premium level of supply or support or resistance, whatever you want to call it, clears this inducement, taps into your POI, and then it continues to sell downwards. So I'm going to look for examples of this to show you. So you see this strategy, and this thing, if you study it so much, you will find out that it works a lot of the times. And if you look for it on the chart, with time, you will easily spot it without stress. So one thing I always look for before I enter any trade, I want to see an obvious level of inducement. So this here is the inducement, this here is the inducement. In case you don't know what an inducement is when price tries to force people into the market. It induces people into the market. It induces you to come and sell. In this case, Rao, it induces you to come and sell. So you have people that came and took their sales. People were selling all the way down here, selling. But then that's not the real move yet. The real sell move is coming when price comes back up, clears all of this liquidity that has been accumulated here. All of these sellers that were here, all the early sellers, price comes, clears them. They've hit their stop loss because most of them have been selling, placing their stop loss at this top here because they feel like a lower high has been created. So, let's ride the market all the way down. But price will come back, clear all of this liquidity, and then it will continue selling. So before I enter any trade using this model, one, I have to see that there was an obvious liquidity sweep. Two, a very clear break of structure. Three, there must be an inducement. If there's no inducement, I'm not entering any POI. I'm not entering any trade because you can have, some of the times, you can have a liquidity sweep. You can get the multiple break of structures. You can even get a very obvious break of structure, but there will not be inducement. There will not be inducement for you to take the trade. So you stay out because this whole setup can be a trap, a liquidity trap. Because mind you, this inducement is a form of liquidity. It's market engineering liquidity for it to come and clear and move. Another thing is you need to know what liquidity is. Liquidity is like the fuel, the fuel or the battery that propels a vehicle, In this case, price is the vehicle. So the price is looking for fuel. It's looking for energy to propel it to move. So that liquidity is the energy. So once it comes and takes all of the energy, it moves in the direction it wants to move. So if you don't see energy, if you don't see money lying around on the chart, which is liquidity now, for price to come and grab so that it has enough energy to move, you don't enter the trade because if you enter yourself without a liquidity, you're going to hit stop loss. Price will come and clear that setup that you think is a setup, right? So let me show you how the setup looks in the buy scenario. This is it in the buy scenario. You want to see a liquidity sweep. Market sweeps liquidity, break structure one, break structure twice, creates a higher high. Then after it has broken the structure the second time, it comes back to clear this inducement, clear this liquidity that it created here, taps into your supply, your area of demand, taps into your order block, taps into your point of interest, then boom, it continues to move. So that is it about this strategy. So right now, let's look for, examples. Let's look for examples. So I show you examples. Now, this week, if you are on my Telegram group, you will find out that I took a trade on NZDCHF, NZDCHF. And that trade is what I'm going to show you now. So this is the trade I took on NZDCHF. Now, this is exactly what I've just finished explaining to you now. Now, these are the three things I'm looking at. One, we got the liquidity sweep here, right? We got the liquidity sweep here. After we got the liquidity sweep, what then happened? Price moved up to give us the first break of structure here. We got the first break of structure here. So after this break of structure, price came down and gave us a higher high, then went up to further break another structure here. So you see, we have two breaks of structure. So what I then did was to wait for price to come back into this other block here, come back into this area of demand, of which it did. So it came in and it has tapped this my entry and it is moving. So as you can see right now, price is already moving in profit. It's moving in little profit. At first, it was, dancing around in loss, almost as if it was going to hit stop loss, but no. Now it's already moving in profit, right? This is a 1 to 3 risk to reward trade. It could have easily been a 1 to 4. In fact, initially it was a 1 to 4, but when I came to the chart, the price was already, away from my entry. So I didn't want to just wait or please buy limit and miss the whole trade. So I just decided to settle for 1 to 3. So this is one example on NZDS And as you can see, it is already playing out. So I expect to see that price continues to push to the upside to take out this area as my TP. If this trade wins, fine, good result. But even if it loses, I am telling you that if you follow this strategy strictly, if you follow this trading system strictly, out of 10 trades, you will win. You will definitely win. So this is the first trade I'm taking on this account. This is a new Profem account, and I'm very, very confident. I'm very, very, you know, optimistic that it's gonna end well. All right. So this is NZDCHF. Let's look for another one. This is GBP NZD. GBP NZD. Now with GBP NZD, there is a little twist to it. A little twist in the sense that there is what I also figured out, that this system works perfectly on support and resistance. You know, the normal support and resistance. Let me draw support and resistance for you. This is your two ranges, right? So if price is moving like this, let's say price is moving like this. Let's say price is moving like this. What is happening? This is price bouncing off below his support, above his resistance, right? Price came to this support, bounce came here. It's just bouncing between support and resistance. Support, support, resistance, support, resistance, support. So when it comes and breaks the resistance here and breaks above, what do you think will happen? Especially if this is a trendy market, an uptrend, especially if we're in an uptrend, especially if the market is trending up like this. What do you think will happen when price breaks this resistance to the upside? What will most likely happen is that price will come back to the previous resistance and it will now turn to support and price will continue going up. In fact, this is like the most basic trading strategy in the world, support and resistance. Every newbie is supposed to know this. Every newbie is supposed to understand this, right? So if this is the concept, what then will happen in a situation like this, whereby you have this was support, right? And this was resistance, right? The support is down here. The support is down here. This is the support. This is the resistance. One thing with trading is that usually price doesn't do exactly like this. It will have its own, little variances. It will not happen as textbook as it is. Like you don't expect it to be as neat as this. So this is A typical example of what I just drew here. Price came and bounced off this support, came to this resistance, rejected, came to the resistance again, rejected, came to this support. You think like it has broken and all, but I mean, it's still within. So it came, this support is still in play as far as I'm concerned. It came up, came back to the support, it bounced, came support, bounced, continued bouncing until it came to this resistance and broke it to the upside. In fact, when it broke it to the upside, when it came here, you can see that it respected it and went up. So now we got to see price come back all the way down here. And then after it came down here, it now continued to buy again until it took out the previous high, printing a higher high. My brother, you see this situation that is here, eh? This is an opportunity for you to buy GBP NZD at this point. You know why? Because this is now your new support. If you look at it very well, it's still aligning with this previous support I see here. It's not too far away from it. It's just like something that happened here. You think that price has broken this support, but still you see that even though it broke it, it still ended up respecting it and price continued to go up. Why? Because we are in an uptrend. The trend is up. We are in a trendy market. So your bias, what you should be looking for is to be following the trend. They say your trend, the trend is your friend. So you want to go with the trend, right? But then I don't just treat this thing blindly like support and resistance. I always look for one thing, which is inducement. If there's no inducement, I don't trade. So in this case, where is the inducement? This is the inducement. So I'm expecting that if this price comes back into this place, it will come and sweep this inducement. Once it takes this inducement, it will tap into this area of demand or order block or whatever you want to call it. And then we'll get that buy. This is what I expect on GBP NZD. As a matter of fact, the way I trade now, I don't even give a damn. If I don't see inducement liquidity, I'm not taking that trade. Do you understand? Now, let me show you a good example of this trade, somewhere that it played out perfectly. GBP AUD. Last week, this is what GBP AUD did last week. This thing I just told you. So, where is the support? Where is the resistance? This is the support as far as we're concerned. This is the resistance, right? Price came to support, bounce, came, bounce, resistance, rejected, rejected. But on coming here, it broke. So when it broke the resistance, you can see that it came back to the resistance and continued to buy, creating further higher highs. So now we have another block on exactly on top of this previous resistance. And because of order flow, because of market structure, because of the most basic strategy in the Forex world, that anytime a resistance breaks, it can turn to support because of the trend. So what then are you looking for? I'm looking for an inducement. If there's no inducement, I don't trade. If there's no inducement, I don't trade. Now see the inducement right here. See the inducement right here. You see? So the inducement was taken, price came, tapped into this other block, boom. A very, very nice 1 to 4 RR. If you had risked 1% of your account, you will have made 4% on this simple trade that took about just 2 days to complete. Just 2 days. So, guys, this is the beauty of the strategy, right? This is the beauty of the strategy. So I will still be making more videos. The more I see more examples, the more I make videos for you. Now, let me show you NZD-USD. Another example on NZD-USD. So this is NZD-USD. What happened? In fact, this NZD-USD, you could have even taken your trade here because we got a sweep down here. Then we got the first break of structure. Please here. First break of structure. Market came down. Before the break of structure, it gave us the inducement. This is the inducement. This is the inducement right here. Right? So before the break of structure, it gave the inducement and broke the structure. came back, tapped into this and bought. And right now, because it has even given more break of structure to the upside, I have marked out this place as my inducement, this low as my inducement. If price comes back into this place, I'll be looking to buy it to the top. As you can see, I've already placed my buy tool here for a 3.5 RR. So this is another trade that has followed the system that I'm looking for. You know what makes this system very, very unique and what makes it very, very high probability? What makes it very, very, what gives it a high win rate is that if you follow the the rules of doing it, if you are buying at a discount and selling at a premium, you get, if you try to buy or sell at the proper places, you will most of the time end up being right because this liquidity has been taken. So most likely this low, you call it a protected low. This low right here, you call it a protected low because price will most likely not come back to take out this low. Why? Because price has exhausted its energy in this move to take out the low, has swept all the liquidity that is down here, all the money that is down here, price has taken it. And it has changed character to the upside. It has given you signs that it wants to continue moving in the opposite direction. So all you want to do now is to target a liquidity that price will come and sweep, and it will use as energy to propel itself and continue moving in that direction that it has shown you that it wants to move to. So you see the number of times price created a higher high, right? A lot of times, keep breaking the highs to form a new high. So it shows me that it wants to continue moving up. So why not? I'll look for an area to buy. While the liquidity is taken, I'll buy it and then I take my profit. Simple as that. So this is USD card. Now USD card is doing something similar, right? Only that I'm not too comfortable with USD card, but then USD card is cooking. Now see what USD card is doing. It took our liquidity down here, created the inducements, gave the break of structure to the upside here. So if price comes and takes out this inducement, I am buying USD card to target here. The only reason why I'm not too comfortable with USD card is because this is, I don't know, it's kind of hanging, just hanging in the air like that. I would have really liked that this whole thing is happening. So this is the range we're looking at. It's still, happening in the discount. I told you how to mark, your area of premium and discounts. You should be buying at the discount, which is the lower half, while you sell at the premium, which is the higher half, right? So in this range, in this trading range, price is actually at the discount, but I kind of would have been more comfortable that this whole price action was happening within this low here. If that's happening within this area, I would have been comfortable to buy at this point. But I'm still going to most likely take this trade, depending on what the market does tomorrow morning. If the market is still within this price range, I can just risk 0.5% on this trade instead of 1%. I will see how it goes. So I'll keep you posted on USD card. I'll post it on my Telegram channel. So this will be it for this first video. If you got value from this, then you should subscribe. You should join my Telegram channel and then just be on the outlook for the next video. So cheers, guys, and God bless.